With the markets making all-time highs yesterday, I'll point out some levels to look out for next week. But before we get into that, there is the closing bell with the S&Ps finishing the day down about 30 points. You can see we've been on a trend down since yesterday's close. I want to point out in the SPX, and we were coming into this week expecting 62 points. Monday we were flat, Tuesday we were flat, Wednesday flat, Thursday we put in a V, and then we gap back down today, and we're closing flat on the week, just right on that midline at 41.81. When we take a look at the S&P from a daily, you can see that all-time high yesterday. Are we putting in a top? I don't know. It's hard to say with so much going on economically across the board. Everything looks good. But we'll come back to the S&P in a bit and discuss next week's expected move. Let's move on over to the Russell 2000. Taking a look at the Russell 2000, it was down about 1.25%. For the most part, the Russell has just been consolidating since about February. Having a sizable day down today, we look at next week's expected move. You can just see it's been really efficient the past 3 weeks, and our upper edge will play 23.17 in the Russell. Our lower edge will play around 22.12. However, over in the Nasdaq, you can see the Nasdaq has been bunched up near all-time highs. It put it in yesterday. The levels to look out for next week in the Nasdaq would be 14,152 as our upper edge and 13,589 as our lower edge. For the most part, the Nasdaq is waiting for a catalyst to move it higher. And if you ask me, I think that catalyst is going to be in the bond market. And when we take a look at the bonds, today they were up 4 basis points, but relatively flat on the day. You can see these bonds tried to get going here, came back down. We putting in a cup potentially. The bonds will be interesting to watch in next week's trade if they tick back up to around 159. And if they do tick higher, it's going to drive yield lower. Taking a look at the 10-year yield sitting at 1.63%. Those bonds rallying would send yield down. If the yields broke 1.5%, the Nasdaq would be roaring to the upside. But when we take a look at volatility today, the VIX futures were up about 4%. So back-to-back days, some nice volume coming in the VIX futures. When we look at the VVIX intraday, the VVIX trended up all throughout the day, getting rejected around 110. This is a concerning sign heading into next week. Seeing the VVIX that trended higher throughout the day versus trending lower isn't a sign you want to see if you're long equities, but we are near all-time highs, and volatility ticking higher should be something to look out for. But when we take a look at some of our sectors across the board, today the consumer staples was our only sector in the green, up 0.09%. It's not saying much. You see healthcare that's down about 0.25%, and you see the industrials that are down about 0.2%. We see the big five down 0.7% after putting an all-time high in today. We saw some good earnings from Apple, Microsoft, Amazon, Google, Facebook. Nearly everybody had some good earnings across the board, but the big five cooling off a bit is a sign that you don't want to see because they are the locomotive to this market. However, they are getting hit pretty hard. When we take a look at the XLK, it's getting hit a bit harder, down 1.4% almost. Broader tech is taking it a lot harder than the big five, but they are both down to say the least. You even have today the financials that have been on a nice tear higher, pull back a bit today, down 0.9% almost. It'll be interesting to see what these financials do in next week. We see software stocks today down 1.7%, putting a lot of stress on the Russell, and it's the XLE today down 2.5%, our worst performing sector on the day. After trending up nicely this week, it's getting whacked to end the week. Speaking of next week, let's take a look at the SPX and see what the options market is pricing in for next week's trade. We hit the trade tab and we're going to look 7 days out. 7 days out, the options market is pricing in $65.58 up or down. Let me draw these levels in and we'll discuss the levels to look out for in next week's tape. And when we take a look at next week's expected move, with 65 points, 42.46 would play the upper edge. You can just see we've been kind of resting near all-time highs. We had a pretty nice candle yesterday. We didn't hit that 42.42, but we're closing negative on the week to say the least. So if we do head down in next week's trade, 41.15 should play some strong support. Seeing the VVIX that ticked up today isn't a great sign, so that tells me next week could start off relatively slow. We could maybe see a down day, maybe possibly 2 down days before finding a floor before going positive. We'll have to take it day by day, but resting near all-time highs, this market is waiting for some catalyst to take it higher. And with earnings all done from big-name companies, that wasn't enough to push it higher. I don't know what possibly could be. I think it's going to be the bond market. When it gets moving, it's going to drive these tech names higher, which in turn is going to drive the S&Ps higher, which potentially the entire basket is going to rally with that. But let's move on over and take a look at the dollar index and see what's going on in the commodities. Taking a look at the dollar index, it's up about 0.75% today, putting in a sizable candle. The dollar got a nice short squeeze. What does that mean for commodities? Well, we take a look at crude oil today, down 2.3%. A reason why we saw the XLE down 2.5%, crude oil getting knocked back down to 63.50. As for gold, gold's relatively unaffected by this move in the dollar, sitting at 1766. This is a good sign for the metals, as it should be over 1800, but it's still sitting below. We'll have to see next week if the dollar continues to strengthen. Can gold at least hold its ground? And then we have Bitcoin. Taking a look at Bitcoin today, it's up 7% over. Sitting over that 1 trillion line, we're seeing a nice day today in Bitcoin. Let's take a closer at my charts, and we'll start with the Coinbase chart. So I'm seeing a crossover here on May 4th, so we still have some time for that. Over the weekend, let's see if we can reclaim that 60K. 59.4 should give it some stress, and you can see this 51.9 held up. This chart doesn't give me many options to look at. When we go to the Binance chart, however, 57.8, call it 57.9. If we do blow past that, that could get some FOMO buys. You can see this 54.5, call it, has played a relatively line in the sand. We can see we peeled off higher on that. If we do head down, 52K should play a strong support. Over in the Bitstamp chart, there's that crossover. It screams to me right there. What date? May 2nd at 10 o'clock. So it's coming up over this weekend. We'll see what happens. Let's hold this line over the weekend. That's around the $1 trillion mark per se, right? Like 53.8 or so. So holding that line would be good. You can see we're well off that line. Potentially could consolidate. But if we do see this crossover happen, I'm expecting some volatility. That could be volatility to the upside or volatility to the downside. We'll have to keep our eyes close on this. But any opportunity you see Bitcoin down is a great time to buy and add to your position. There you have it for the stock market breakdown. So that completes the month of April. On Monday, we'll be starting the month of May. And will the saying hold true? Sell in May and go away? I don't know. With an expected move of 65 points and resting near all-time highs, you can't expect much to the upside. Seeing the VVIX go positive today and tick higher isn't a good sign to see. That tells me Monday could be a relatively slow day, depending what happens over the weekend. But we do have some big numbers coming out next week, more in the latter part of the week, with non-farm payroll numbers as well as unemployment number. We'll have to look out for those numbers. If they are ticking in the right direction, it's going to put the Fed in a sticky spot, which is why I think bonds hold the key to this marketplace. Are they going to go higher, or are they going to come back down? So we'll have to keep our eyes on the bonds next week. Even though they are a boring product to watch, they do have a lot of pull in this marketplace. But if you watched the video and enjoyed it, don't forget to leave a like. It means a lot when you guys can show some support. And if you're watching me for the first time, I love to do macro market breakdowns. Show some love and hit that subscribe button. It really make my day if you guys can do that. Any comments or questions for me? Where do you guys see the markets going next week? Are we going to have a positive week, or is it going to be another negative week? I'd love to hear your guys' thoughts. But on that note, I will see you in the next one. Have a great night. Take care. Peace!